Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit more shorter-term technical analysis on Bitcoin because in today's video, I want to discuss this pattern that we're looking at here on Bitcoin. This very clearly looks like a head and shoulders pattern to me, guys, with a shoulder right here, a head right here, and a shoulder right here. We've been talking about how it's very possible that this uptrend on Bitcoin is not the actual beginning of the rally for Bitcoin again, and that we may see some more bearish price action before that happens. So in today's video, I want to discuss whether or not Bitcoin is actually about to crash below recent lows, down all the way down to around $8,000, because I think that's not necessarily the most likely scenario, but one that we definitely need to be aware of and be prepared for so that we can trade accordingly. Guys, before we dive on into it, I do want to mention that something really awesome happened last night. We hit 25,000 subscribers. I am so blown away by that, guys. Only about 13,000 of those accounts are emails that I have created. So that means 12,000 of you guys subscribed to the channel, and that is absolutely crazy to me. Thank you to every single one of you who has subscribed because we've hit 25,000 subscribers, and I want to celebrate a little bit. I'm going to be running a sale on the Cryptocurrency Technical Analysis Academy. The coupon code is 25K. 2019. That'll give you $40 off the Cryptocurrency Technical Analysis Academy, where you can learn everything you need to know about how to profit in cryptocurrency markets. Anyway, guys, without much further ado, let's go ahead and dive right on into it. I do want to start out by talking about the head and shoulders pattern here, but I also think we need to zoom out and give ourselves some context before we start talking about that as well. As we know, Bitcoin has been in a state of rallying for a very long time. Over 130 days, Bitcoin rallied all the way up here to 300% from the bottom. $14,000, a $10,500 rally. Bitcoin basically went to the moon. I mean, that was pretty much our moonshot. Anything from here is us going to the stars. From there, of course, Bitcoin was going to have a correction. But I want to point something out. Bitcoin's only had a 35% correction so far. And if we look back in history on Bitcoin, even shorter rallies than this back in 2017 that would result in a 180% run, for example, and a $3,000 movement would result in a 40% correction. So we've had a very large rally and not the large correction that you would oftentimes expect to come out of Bitcoin when this kind of rally has happened. With that in mind, I think it's very possible that Bitcoin has a 40 to 45% correction instead of just a 35. That would put us down here around $8,200 to around $7,500, and I think it's possible we go to an absolute bottom of $7,500. And that's why we're talking about this in today's video, is because this downtrend might not be over yet. Some people in the comment section of yesterday's video pointed out, Jeb, why are you so bullish? To be clear, I wasn't extremely bullish in yesterday's video. I was laying out a scenario of how we could go bullish. It wasn't that I was very bullish, but they were right in saying this. Bitcoin really has not even started to confirm bullishness yet. We've had the confirmation of early bullishness. We're kind of in the early phases of a rally, but that doesn't mean anything yet because we haven't had those longer term confirmations that we discussed in yesterday's video. The things that we discussed in yesterday's video are very applicable to today's video. I do recommend you watch that before you continue on with this video. A lot of the things discussed there are going to be very important for what we talk about here, but I will go over them again briefly so you guys can be caught up to date. Some of the things I talked about were the confirmation types that we need to see Bitcoin maintain and confirm with before we can say that Bitcoin is in a proper uptrend. A couple of those was Bitcoin's RSI trading above 50 to 60 and trading up here around 60, 70, or 80. That's a good indication that you're in an uptrend. Another thing would be a bullish cross here on the daily chart with the MACD. Both of those things would be indicative of a new uptrend. Stochastic RSI moving to the upside, RSI sitting in overbought territory or close to it. All of those things are indications of a uptrend. And it's very important that we see those kind of things. We haven't seen them yet. So it's still very possible that we have a correction. With that said, let's talk about that correction, because what we are seeing here, and I saw this in yesterday's technical analysis, I didn't mention it in the video, was that this was starting to look like a head and shoulders pattern. If we go back 24 hours, we're going to see yesterday the chart looked something like this, and Bitcoin had just been in this little bit of an uptrend here. I think we had just set this bottom down here. If we look on the thumbnail, we can see that's a little bit further ahead than this. If we play this forward, we were probably about right here in yesterday's video. Nevertheless, the point is, now that Bitcoin has moved forward another 24 hours, we are now basically trading sideways. We're not really in an uptrend anymore because, I mean, just look at it. We're basically trading sideways, and also we have this head and shoulders pattern. What we see here is that Bitcoin's trading sideways. That's an indication of neutrality. It doesn't really mean that we're bullish or bearish, but at the same time, we have a bearish technical indicator here. We have this head and shoulders pattern, a bearish chart pattern, I should say. So what's going to happen here? Is Bitcoin going to break bullish or not? Well, there's a couple different reasons that I think we might break bearish. Here we see that Bitcoin is actually also in a consolidation pattern and is moving sideways. Likewise, this is going to cause a breakout sometime today. A breakout is most likely going to happen today. It might not be a big one, but also if this breaks bearish, guys, I have this bad feeling that's going to be a big one. If Bitcoin does break bearish below this neckline right here, there's not a whole lot of support below us. Let's go ahead and look back here. We have a little bit. If we bring up our cross, I mean, we have some here at $10,000 flat. We might crash all the way down to 10K. Below that, guys, I mean, what do we have? $9,700 and then $9,100? There's not a whole lot down there, and it wouldn't surprise me if we go lower. So with that said, how low could Bitcoin go should we continue this downtrend? Because I mentioned the price targets of $8,000 earlier. Was I serious about that? Is it possible that Bitcoin actually goes that low? Yes, let me show you why. First of all, if Bitcoin does have a crash here, it's probably going to bottom out somewhere around $8,900 or this downtrend of support to start with. But there is also the possibility that we go lower than that. I will show you exactly why. Out here on the daily chart, if we look back into 2017, what we will find is that oftentimes Bitcoin would come down to this gray moving average right here. That's the 100 daily simple moving average, the 100 DSMA. This simple moving average is very important in Bitcoin technical analysis during bull markets. As you can see, Bitcoin very often comes down and tests it as support. We saw it here, we saw it here, we saw it there, we saw it there. We see it a lot. It's a very common trend. If you go back into the previous bull market, Bitcoin does it as well. This is a very important uptrending level of support that Bitcoin oftentimes gets support on when you're in a bull market. Notice, though, that we haven't actually gone all the way down to it so far. Down here around $8,300 to $8,400 right now. Bitcoin's bottom's only here around 9. So there is still more room for Bitcoin to have this correction. And if Bitcoin did do that and it corrected down to where this moving average might be in a little while, guess what, guys? That lines up with that 40% correction that we still haven't gone to yet. I think it's still very possible that we go down there. I don't necessarily think it's the most likely scenario. I think that Bitcoin, if it goes anywhere, is probably going to bottom out here around where these two lines just happen to cross, somewhere around here or somewhere around here. Probably not there because it's right below us, but as far as where we may go, probably somewhere to around $9,000 if we break bearish out of this pattern. Keep in mind that since this is a head and shoulders pattern, it is possible to actually draw a price target on it. I'm not a big fan of price targets on head and shoulders patterns, but you could draw something like this and have a price target at $9,700. But like I said, because there's not a whole lot of support, we're probably going to blow that out of the water should we actually have a bearish rally. Like I said, guys, Bitcoin could rally here. We could continue the rally. We're still in a very neutral position. The oscillator is looking very neutral. The chart is looking very neutral. Bitcoin has not really decided which direction it wants to go. This is a decision point for Bitcoin. We're trying to figure out if we want to go bullish or if we want to go bearish. In this video, I was not laying out me saying that I think Bitcoin is going to go bearish. That's not what I was saying. I never said that. I want to be clear on that. I did not say that Bitcoin is going to crash. What I do think is that it's a very likely possibility, or excuse me, not a very likely possibility, but a possibility that is in the realm of possibility that we need to take seriously so that we can be prepared should it come to pass. I'm not going to put percentage values on these because there's not a whole lot of technical analysis that's very useful right now, to be totally honest. Most technical indicators are trading sideways. They're not really very useful right now. We'll see what happens. I think that Bitcoin is going to be very bullish about a month from now, but we're going to have to see what path Bitcoin takes to get there. Anyway, guys, that's going to do it for the technical analysis portion of today's video, but I have a very interesting article here that I want to read to you guys for two different reasons. One, because I want to talk about what the article is actually talking about, but I also want to talk about the idea of attributing cause to certain things that happen in the market. This is something that the article talks about very early on. It's a very important concept, one that I've talked about many times here on the channel, and they put it so eloquently that I want to go ahead and read this article for both of those reasons. So let's go ahead and dive on into it. Research finds Bitcoin and Litecoin halvings do not impact price. Now, that's very interesting that they would say that, because it's commonly accepted, at least in mainstream and at least in news circles of cryptocurrency, that there is a cause and effect. There's a causality to rallies, and that causality oftentimes is attributed to halvings. Whenever a halving happens, oftentimes you'd think, okay, well, a rally's going to happen. Well, guys, I do want to point out that the last Bitcoin halving happened somewhere over here. There wasn't really a whole lot of bullish price action. I mean, a bull market followed, but it was such a small correlation that it could very easily be attributed to a coincidence. But anyway, reading on with their article here, Contrary to the popular media narrative, new research finds that Bitcoin and Litecoin prices are unimpacted by block reward halvings. And that's interesting because I both agree and disagree with what they're saying here, partially because of their methodology in this research. I'll get to that in a second. The main reason that I think that block reward halvings do have some impact on the market is not because of anything fundamentally. It's not to do with miners having less cryptocurrency to sell. It's actually because of the media hype. A lot of times people expect the market to rally when there is a halving, and oftentimes the market rallies because people expect it to rally, and because people expect it to rally, people go and buy Bitcoin or Litecoin, and then the market rallies, which is why some people talk about how, oh, the price action's already priced in. There's not going to actually be a rally on the day of the halving. It's going to happen 2 weeks before. That's what we're talking about with Litecoin right now, with the halving just around the corner, and a lot of people are seeing that happen on Litecoin in the same way that we've seen happen on Bitcoin and other cryptocurrencies in the past. Let's continue on here. People crave cause and effect relationship. The crypto markets are the opposite of what people want, a near perfect machine of randomness and volatility. Nonetheless, people's desire for cause and effect causes the mainstream media to build narratives around likely arbitrary price changes. Bitcoin price recovers after tumbling on Libra hearings, writes Forbes. A mysterious order triggered the beginning of the 2019 bull market, reports Reuters. Tether issuances are the underlying factor behind Bitcoin's recent resurgence, suggests QZ. And this right here, these 3 paragraphs, I'm going to go ahead and finish the last paragraph because I want to be complete here before I dive into what I want to say, are so very important. These are some of the... I love that this came up. Yet even phenomenon with basis in logic may be susceptible to the cause and effect fallacy, if you will. One widespread belief among cryptocurrency enthusiasts is that the halving of block rewards causes prices to increase, and the logic is sound. If miners earn fewer coins, then sell-side pressure should decrease, at least you would think so. Reductions in supply, consequently, should cause an associated increase in prices. Well, there's several things I want to talk about here before we even get on to the rest of this article, because there is a little bit more. I'm not going to read everything else. We're going to breeze over that. But there's a couple things I want to discuss here. One is that miners don't actually have that much Bitcoin. If we were to go on CoinMarketCap here, then we can see the circulating supply of Bitcoin. We can see the volume and everything. But guys, I want to ask you a question. How many Bitcoin are actually mined every day? Well, there's actually about 1,800 Bitcoin that are mined every day because you have 144 blocks that are mined. Bitcoin gives you 12.5 Bitcoin for every block that's mined. You multiply those together, you get about 1,800. At current price, Bitcoin is worth about $10,000. You multiply those together, and we have about $18 million of maximum sell side pressure. There's about $18 million that can be sold every single day worth of Bitcoin. Guys, $18 million is not a lot of money. If we come here to CoinMarketCap, there's been $16 billion worth of volume reported on Bitcoin on CoinMarketCap. Cut that by 3/4 because a lot of this is just nonsense. CoinMarketCap tracks literally everything, and a lot of these exchanges use wash trading and everything. Even if we say there's only $4 billion of daily volume, $18 million of sell-side pressure has a very small impact, and that little change from $18 million divided by 2 when the halving happens to $9 million, a $9 million difference in daily sell-side pressure at most is not going to make hardly any change to the market. The second thing that I want to talk about here has to do with the cause and effect fallacy that we've talked about so many times on the channel, but I've never really had a great way to put it into words, which is why I'm so happy with this article, because this is a great way to put it into words. People oftentimes look for a cause to a certain move in cryptocurrencies. They'll say that what happened yesterday caused this move, or this caused this move, or that caused that move. That sometimes, and honestly in my experience most of the time, is complete nonsense. A lot of times the market moves purely because of technical analysis plus randomness. News doesn't have as much of an impact on the market as I think a lot of people make it out to be. Now don't get me wrong, fundamentals have a huge impact on the market. If something has changed fundamentally in cryptocurrency, that's big. But let me give you an example of why news isn't that important. Can you see here on the chart when Bitcoin was denounced by President Donald Trump? I mean, literally the most powerful person on planet Earth, one of the most contentious figures on the planet, decided that he hates Bitcoin. And that, excuse me, I don't want to misquote him, decided that he is not a fan of Bitcoin, or the words he used. That's a pretty big deal from a news standpoint. The leader of the free world saying, hey, by the way, I don't like cryptocurrency. You think that if news had a giant impact on things, you would be able to tell on this market where he said that. I can't tell you. I forget exactly what day it was. I want to say it was back over here on the 8th or the 9th. I'm pretty sure he said it during this uptrend, and it really didn't have much of an impact. That's because fundamentals and technicals will change the price, but news doesn't have as much of an effect on price action as a lot of people make it out to be. Now, With that said, news does have some impact, and if the media hypes something up enough, then it is going to have a major impact. But small news stories that are not really bullish or bearish in most cases are not going to have a massive impact. The point I'm trying to make here is that we need to value news a little bit less, value fundamentals and technicals a little bit more, because those are the things that are actually driving the market, at least they have been in my experience. Reading on here, like I said, the rest of this is going to be relatively brief, because the main thing I want to do is level a small critique at their research methodology, and then we're going to wrap it up here. But basically the way that they went ahead and researched this would be as following. Research on the price impact of halvings. I'm going to go through this pretty quickly. Research conducted by Nico and Ava from Strix Leviathan at Seattle-based startup that specializes in engineering and operating trading algorithms for the cryptocurrency markets challenged the belief that halvings materially impact coin prices. The researchers analyzed 32 halvings across 24 cryptocurrencies. That's where my problem is, and compared these to an overall market benchmark. Performance on each coin was evaluated 6 months before and after each halving and compared against cryptocurrencies not going through a halving event in the same time frame. Now, this is actually where we're going to stop on this article, because this is where I have my problem. You guys can continue reading this article on your own. If you want, you can come find the article with the title at the top. The problem I have with their methodology here is that they're analyzing cryptocurrencies other than Bitcoin and Litecoin. Well, guys, guess what? The news never talks about cryptocurrencies other than Bitcoin and Litecoin going through halvings. They just don't. They never, I mean, they just don't care. And the reason that they don't care is because they're smaller cryptocurrencies. If they did this research on only Bitcoin and only Litecoin, one, the research would take a lot longer and they'd have to do back testing and look at the market previously. But if they did that, then they would also be seeing the effects of the news. So what they should do is take, in my opinion anyway, what they should do is they should take this research and use it as a benchmark and compare it to research where they go and they backtest halvings on Bitcoin and on Litecoin, because I have a feeling if they were to do these same tests on Bitcoin and Litecoin, they'd see that halvings do have an impact on their price actions, just not as much as people make it out to be. And the reason I think halvings will have some kind of impact on Bitcoin and Litecoin is not because of a fundamental change. Like I just showed you, the fundamental change on sell side pressure on Bitcoin is minuscule. The reason that I think halvings do have some impact on Bitcoin and Litecoin is because they are noticed by so many people and they're used in so many people's technical analysis. So many people are making trades based off of them. They're used as a benchmark for when Bitcoin bull markets are going to start. They're a major component of Bitcoin technical analysis, even if they actually don't mean anything at all. And because of that, they are going to have some small impact on price action. At least that is my opinion. I would love to see research on this. I hope they do a follow-up study on this. But that is the one critique I'd level at this research, is that they're analyzing currencies other than Bitcoin and Litecoin. Now, if they're only trying to figure out whether or not the halving itself is having a fundamental change on the cryptocurrencies price action, I would agree with them. It's not going to change anything at all. And that's what this study just proved, actually, is that the halving itself isn't going to cause any change at all. It's the news that is causing the change. So I want to be clear on that. I'm not disagreeing with their research. I think they're right here. I think that they just need to go and do another study with this in mind, or they should have included it in this one. Anyway, guys, I think we got to a lot of very valuable news in today's video. I think we covered a lot of very valuable topics. I think that Bitcoin is definitely in a very interesting position here. We may see a breakout here in the last few minutes of the video. No matter what happens, guys, I think Bitcoin is looking very bullish for the remainder of 2019, even if the next couple of weeks have a chance of being somewhat bearish. Whatever happens, guys, the most important thing that you can do is learn about the cryptocurrency markets, and that is why I created the Cryptocurrency Technical Analysis Academy. Like I said, guys, we just hit 25,000 subscribers, and I want to celebrate a little bit. I am so very happy and thankful that you guys have managed to make this dream of mine come true. I've been dreaming about being a YouTuber ever since, like, 10 years ago when I first got onto YouTube. When I first started watching YouTube, I would watch a lot of YouTube. I was not in the same position 8-9 years ago that I am in now, and I would always want to be a YouTuber. I saw these other people doing YouTube videos. I'm like, there's really nothing special going on here. I know that I can do that. I believe that I can do that. And now somehow we're managing to do it, and it's not because of me, it's because of you. Like I said, only about 13,000 of these accounts are mine. That's a joke, of course, for anyone who didn't catch that. Nevertheless, guys, if you guys do want to learn how to trade cryptocurrency markets and you do want to be more profitable in these markets, if you already are, a great way to do that is by learning. It's very important that when you're getting into cryptocurrency markets or any market in general, that you don't go put all of your money into the market and then hope that you're going to make money. I mean, it's not, Bitcoin and cryptocurrency is not a multiplication machine like you saw in your textbooks from middle school. It's not you put $1 in, you multiply by 3, and then you get $3 out, and then you put $3 in, you multiply by 3, and you get $9 out. It's not like that. You have to know what you're doing. You have to know exactly what you're doing. If you want to make money in these markets, because the vast majority of people don't when they're trading, if you want to make money while trading and investing in these markets, you need to know what you're doing. And guys, I will be the first one to tell you that a lot of the things, not all of the things, but at least some of the things that you can learn in this course, you can learn on your own through watching YouTube videos and through Googling things. I will tell you exactly why you don't want to do that. That's the route that I took, and it took me 2 years to get to the place where I could competently make this course so that I can actually teach you guys how to work in these markets. And guys, let me be honest with you, it took a long time. It was frustrating. It was so frustrating because a lot of times you don't even know what you don't know, so you don't know what to go and Google. You don't know what to learn, and a lot of these things are not things that you're going to find on Google. A lot of these things are not things that you're going to find through watching YouTube videos. These are things that you have to learn either through experience or through someone who is going to tell you what's going on. And the things that I talk about in this course, people don't talk about on YouTube because it's valuable information. If they are talking about it, it's behind a course. And that's why I made the Cryptocurrency Technical Analysis Academy, is because I want to be able to give you guys this information while also being able to have a business that allows me to maintain the channel so that I can continue bringing you guys videos. That's how this all works. Because of the people, because of you guys who joined C22A, paying for the course, it allows me to continue the business. It allows me to pay my editor. It allows me to build up everything that's going on behind the scenes that you guys are going to start seeing in the next couple of months. It allows for everything that goes on with the channel to continue. So if you want to learn how to make money in the cryptocurrency market while also allowing this business to maintain itself and continue growing, I would highly encourage you to click the link in the description. Down below will be somewhere that you can copy and paste the coupon code. It's 25K2019. At checkout, you can paste that in. You get $40 off the course price, which will bring it down to $159. A lot of people charge $500, $1,000, $2,000 for their course, guys. I don't want to be that guy. I want to be the guy that allows the vast majority of my subscribers to learn how to trade these markets so that you can be profitable in them. Anyway, guys, that is going to wrap it up for today's video. I do hope you did enjoy the contents herein, and I do hope you enjoy the rest of your day. I do want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.